All right. Hello, Dominic. Uh, Happy to catch up with you today. I know you just got back from your trip to Omaha, Nebraska, where you were visiting for the Berkshire Hathaway annual shareholders meeting. There's also a number of events that happen outside of that. So, why don't you just start by telling us a little bit about that trip and some of the key highlights of the other events that you hit on while you were there?
Sure. So it was there from Thursday to Monday. The annual meetings on Saturday. Thursday, there's a CFA of Nebraska puts on an event. This year, it was hosted by, or the speaker was Brent Beshore. He's the founder of a fund called Permanent Equity. It's just a differentiated private equity style investment group. And he was on stage with Carl Edwards, the former NASCAR racer. It was just a Q&A session to learn about Brent and what their fund does. Friday was the Mario Gabelli, his fund puts on a speaker series basically where you got a couple different companies that are either local or the Gamco Gabelli's fund owns. They go up on stage for about 45 minutes and give presentations about their companies, take Q&A sessions. And it's interesting to hear Union Pacific was one of the companies that was discussed. And obviously, with all the tariff news and different trade events going on, it was good to hear their perspective on what's going on in the rail industry. Saturday was the annual meeting, which we'll talk about more, and is obviously the highlight of the weekend. And then after the annual meeting was a fundamental edge. It was a program that I took 2 years ago. They had a meetup where a lot of the alumni that took the class and some of the individuals that I've interacted with before, we all just basically meet up, just catch up on what's going on. A lot of these individuals are working at some sort of fund. So a lot of it is also like, hey, what's your best idea or what's some ideas to look at? So you come away from the event with some stock ideas to go research. And then Sunday morning was the Markel brunch. They're another insurance company that is structured just like Berkshire Hathaway and kind of models themselves after Berkshire. So all in, busy 4 days, but it was incredibly fun and informative.
I'd say that's pretty busy. I've been out to Berkshire 3 times myself. I was slightly jealous that you were there and I didn't get to go, just because of the whole fanfare around the event. I mean, like you're describing, it's not just the annual meeting. It's a mecca of a pilgrimage of like-minded value investors all
Yeah.
coming together, and there's all these other events that are happening. The energy level in Omaha is so high for that whole week. When you got back, you had said to me this was one of the best research trips you've taken. Tell me why that is, and what you liked about it so much.
One of the things we talk about a lot is building out this network of investment professionals so that, you have ongoing dialogue. And there's some funds that we've talked to in the past that are invested in the same companies that we are. And then you also get to hear what other ideas that they're researching. And I think I added maybe 10 to 15 individuals just in the span of 4 days, which, that for us, that's a lot. You're in Rochester, New York. The investment network here is more like CFP or just sort of asset management. So there's not a lot of individuals in Rochester, New York that have the value investing background that we have. So when you can go to Omaha and you get thousands of like-minded individuals all in one space, it allows you to really accelerate the growth of your network. And so I think that was, for me, the best part. I got to talk with fund managers that range from individuals specializing in the commodities sector to healthcare to other just hedge funds that go long short stocks to just like your everyday traditional value investors. And I think that's what shocked me the most was going there, I was like, there's probably going to be a lot of, long-term oriented, deep discount value investors. And when you come away, or when I went there, it was, you've got hedge funds that short, and Buffett has basically said he'll never short, which not something I expected. To you've got hedge funds that are invested solely in like healthcare and tech, and that is an area that Berkshire is not really focused on, and just because of the complexity of the industries, and was just stunned at how diverse of a group is really there. And I would say for us, like, at least I'm going to say for me specifically, focusing on healthcare names or technology names, the time to get up to speed on those companies is significantly more than like a industrial company or a consumer, or certain financials companies. So being able to build out a network that focuses solely on technology or solely focuses on healthcare, it should over time allow us to find ideas in that space and get up to speed a little quicker on those.
Right. Yeah, you streamline your process by identifying, hey, this person has a similar first philosophy, but also I understand the process. And if they've gotten through to the point where they're making the decision to invest in somebody or a business, I should say, you have fairly high conviction that they've done their due diligence, right? And so the opportunity to piggyback, whereas some investors would say shamelessly steal other ideas. It's actually been a phenomenal way to invest, and shouldn't be shy about it. I mean, if you know somebody is a great investor, why not follow their ideas?
Yep, agree.
Let's go through. We'll start with the CFA Society Nebraska event first, and it was Brent Beshore that spoke at that event. Why don't you just start by telling us a little bit about what's unique about that organization? I think it is one of the most unique management structures that we've ever come across, and maybe some of the things that we might take away in terms of just how do we incorporate some of those ideas into our work here at O'Keefe Stevens Advisory.
Yeah. So Brent runs a private equity fund called Permanent Equity, and their approach is much different in that their fund itself and the companies that they acquire within that fund do not use any leverage. And if you compare that to what a traditional private equity company does, if they're making $1 billion acquisition, they're typically going to put on 600, 700, $800 million of debt to fund the purchase of that. So the reason he does that is because he wants to make his business and the companies incredibly resilient. In times of like a recession or market turmoil, they are not on the brink of going insolvent. And he said that was particularly noticeable in 2020 when a lot of businesses came to a halt for a couple months during COVID, and just they were never worried that they were going to run out of capital, because on top of not running their companies that they own with any debt, they themselves, their organization runs with 3 years of cash on their balance sheet to fund the day-to-day operations of the business. So they have just built an incredibly resilient business model. And then on top of that, their fund structure is far different than the typical private equity fund is anywhere from a 7 to 10 year fund life. Brent's fund is a 30-year lockup. And over the course of the 30 years, assuming they make good investments, the investors receive distributions. I believe it's quarterly distributions. And the only way Brent and Permanent Equity gets paid is if their investments return a certain percentage return over a hurdle rate. So it might be above a 6.5% return. Brent gets 20% of Brent, and the fund gets 20%, and then the remaining 80% of the distributions go to the investors. So he's heavily aligned. He's built a really resilient business model. And his background on how he basically got into the space was, I'm going to say, unconventional. He didn't go to school for finance or anything. The first company he ever bought was a marketing firm, and he grew that business very successfully. And the interesting part was, even though the marketing firm did really well in terms of revenue growth, he said the year that he made his first $1 million was one of the most miserable years that he ever had, because like his family life was not good. He was gaining a lot of weight because he was working so hard and just out to dinner all the time. And it just put in perspective that he thought that first million he was going to be incredibly happy. And he gets there and realizes like this is not how he envisioned his life going. And so for us, it's, everybody's end goal is not going to be the same. whether it's in retirement, people's, I'm gonna say like net worth or what they want their living expenses or their life to be like, is going to be so different from person to person. And you kind of you have to figure out what it is that you're looking for kind of in life. And I think it was just a really interesting anecdote to hear.
Yeah, it sounds like he's taken from his, I would say failed experience is probably not the right term for his marketing venture, but he's focused on continuous improvement, which
Yep.
is something that we it's in our core values here, right? Like continual learning and improvement.
Yep.
And I just love the idea of that resiliency. You don't see many businesses that keep 3 years of operating expenses on hand. But look at our own financial planning approach with people who are preparing for retirement. One of the key attributes that we want to have is that 2 to 3 year liquid cash reserve within the portfolio or in their bank accounts, so that come hell or high water, that money's there, it's stable, it's protected, it's reliably going to produce that supplemental stream of income. And it's something that maybe that's not an optimization tactic in the long run, or in the short run either, right? But what is the mental um, release of stress
Yep.
that's provided by having, you don't have to make decisions based on short-term financial impact when you have that, right?
Yep, absolutely. He said he was asked a question, why don't you run it with any debt? And he goes, if I were to run the fund with debt, he goes, there is no doubt the returns over the past decade would be much higher than what they were today. But you also have that risk of going out of business, and it might not happen today, tomorrow, next year, but it just increases the probability that that happens.
Right. Also, the ability to think clearly and be patient is severely diminished
Yep.
when you have that added stress of having to make interest payments, right? So,
Yep.
highly consistent with our approach here. Just in the interest of time, so it sounds like the CFA Society of Nebraska was a really cool event to be at. But let's move on to the Gabelli conference. So Mario Gabelli is like a a legend in the value investing space. I've seen him. He shows up in Omaha every single time, right? He brings a fleet of people from Gamco with him.
Yep.
I'm sure there was a lot of people at that event, and he spoke, and some others spoke. Tell us, what did you learn at the Gabelli event?
Yeah. So one of the speakers there was Chris Bloomstrand. He's basically, I'm just going to say, one of the experts on Berkshire. He's followed it for I don't know how many decades. Writes an annual report on Berkshire, gives a valuation. And it was good to hear his perspective on just what he thinks is going to happen once Buffett. This was on Friday, so it was before Buffett announced that he was retiring. Just good to hear what he thought was going on at Berkshire post Buffett. And the panel was pretty consensus that Berkshire was around fairly valued at today's valuation. And the main question that was asked is, what are they doing with all the cash? They have an incredible amount of cash. I think it's like $330 billion of cash. What is their plan with that? And just like, what are the capital allocation strategies moving forward? A lot of them said that a dividend could be in the offering post Buffett. We'll probably talk about that more. So that panel itself was good. Union Pacific was there. With all the trade issues and news going on, it was good to hear how their business is performing. And the answer is like they are not. It's not really affecting them. They continue to be in a really good position. There might be volume declines in the near term, but over the long term, rail is such an efficient use of or efficient way to transport different goods and materials that over the long run they'll be fine. And then the last part of it was John Rogers of Ariel Investments and Mario Gabelli of Gamco were on stage just talking about just what they thought about the market, currently valuations. Both of them talked about going internationally. Looking at international foreign securities is likely to be a better option than investing in the U.S., just given the valuation discrepancies between the countries. I think that makes sense. You've seen what we've done in the portfolios as of late. besides that, I think it's incredible that Mario is, for his age, just like how much energy he brings is pretty cool. He's a funny character. So I think all
That's
in,
for sure.
yeah, all in, it was a good presentation. Good to hear from everyone. I don't think there was anything earth shattering that came out of it though.
Sure. Let's do Berkshire at the end because that's kind of the focus of
Yeah.
this call anyways. But tell us what fundamental edge is first,
Yep.
because I don't think we've had you talk about that at all. And then talk to us about that meetup and what that community is all about. And I'm assuming that's where a lot of those connections you mentioned
Yeah.
earlier came from. So
Yeah. So Fundamental Edge, it's a training program for analysts, and the one that I did was a several week course. You met a couple times at night. It was like a 3-hour class. And everybody that took the class is involved in some way, shape, or form in the investments industry. You might be working in private equity, you might be working at a hedge fund, you might be working at an RIA. But it was all catered towards learning about how to basically value different businesses. And so I took that a couple of years ago. And the good part about that is you stay in the network of different alumni. So they put on different events during the year. This is one of them. And again, since everybody's in the industry, you can have some really good in-depth conversations with people. So the meetup was just a happy hour. There were 30 people. One of the interesting individuals there was Mike Green. He's at the CFA of Rochester. Cliff Asness brought him up. Mike Green is prominently known for his work that he's done on basically passive investing or index investing and the effects that it has on the overall market structure and what it does to valuations of large companies versus like your lower weighted index. So I was able to talk to him. I've listened to so many podcasts about him and different papers that he's wrote. So it was good to hear his just like one-on-one perspective of what is actually going on with passive investing. So that was a 2-hour event. Again, got to meet a lot of different individuals. One individual met was from a very prominent fund, and was just able to learn kind of about like their strategy, what their ideas are looking at. So all in, again, just more people connect on LinkedIn, get their emails, and chat with them more as time goes on.
would you describe that group of investors as contrarian? And were there any particular viewpoints that you gleaned from that group that maybe would challenge some of the thoughts that we have here and make you, see things in a different way?
Contrarian. A good question. I don't I don't know. I don't know if that is how I would describe it. I think there were so many different individuals that are working in different funds that when I talked to everybody, nobody was talking about the same thing. So I talked to a guy that's buying Fannie Mae to a guy that's only buying like some commodity companies to just buying like consumer companies. So I don't know about contrarian. I think just a lot of different perspectives going on.
Yeah. When you talk to people at those events and you talk to them about things that we're buying, what are some of the names that you're sharing?
Talk to them about Compass Minerals, Donnelly Financial, BMW, Mercedes, mainly the recent purchases. A lot of these funds have certain market cap, like lower bounds or restrictions. So some of the companies that I would talk about, they are just like too small and they don't look at them because they could not invest in them at the current prices, which I think it's like good to hear on one hand because it's like we're maybe one of the few people looking at certain securities. When there's less people looking at it, more likely to be a mispricing. So that was good to hear. Talking about Qualcomm, it's a main holding. Green First, there was one Canadian investor asked if he had ever heard of Green First. He had not, but those are, I would say, by and large, like the main ones that we talked about. BGC came up obviously as well.
Got it. And then you said you went to the Markel brunch. So Markel's kind of described as like a mini Berkshire Hathaway
Yeah.
by many. Um, any insights that you came away with from the Markel breakfast?
Not really. They basically just outlined their strategy at the outset, saying you've got this large insurance company, and it just allows them to go out and acquire smaller businesses. And they just went through their plan on how they plan to grow the insurance business, which allows them in turn to go out and make more acquisitions in the future. Um, I I think the only thing that I would learn there is like comparing Markel to Berkshire over time is probably like the barometer. You've got Berkshire, Markel, and then there's another company called Fairfax. They're all all three are basically like the same company and all run by great management teams. And the question is basically which of the three do you want to own? You can throw Lowe's in there as well because they're kind of similar with the CNA Financial that they have a large stake in as well.
Right. Um, so let's shift gears. So we use the rest of the time to talk about the Berkshire Hathaway meeting. Obviously, the big news here was Warren Buffett's announcement. Tell me what that was like.
Yeah, it was at the end of the meeting, and he basically goes like, I have one more thing to say. And you look around, and I think people started to be like, okay, this is not normal. Let's like stop talking and listen to what he has to say. And then he goes on to say at the annual meeting or at the end of the year, he's going to step down or advise the board to step down and have Greg Gable take over. And obviously, like a bit of like a somber moment because greatest investor of our lifetime is announcing that he's no longer going to be at the helm doing it. Um, so he said he'll stay on in some capacity as chairman. My guess is next year he'll be on stage for the morning session, and then in the afternoon session it'll be Greg and Najit. But yeah, I mean, it was cool to be a part of, but just an end of an era.
Yeah, one of the most telegraphed and I would say well planned
Yeah,
CEO transitions
yeah,
of all time, but still somehow surprising,
right.
right?
Yeah. You just
Uh,
think that moment's never going to come, basically, because he's just been doing it. That was his 60th annual meeting, he said. So, like,
yeah,
just think it's not going to happen.
and you've been there before when you've been there when Charlie Munger's
Yep.
been at the meeting. How would you describe it? How was that meeting without Charlie Munger? I've never been to one without Warren and Charlie both on stage.
Yeah. I I think I like it better. I shouldn't say I like it better. Warren and Greg are not the same people, whereas I think Charlie and Warren they're just like so tightly knit that one is never gonna like contradict or say the opposite of another. So whereas Greg, I think, has a little different of a perspective, not working alongside Buffett for however many years. So and Greg kind of has a different background working in the utilities business for however long he's been in.
A
So
long time.
yeah. So I think it was just good to get different viewpoints and just like different rationales behind certain strategies. So
Yeah. Do you did you get the sense that there's going to be any big changes coming down the pipeline for Berkshire?
uh not while Buffett is alive, I don't think so. But once Buffett passes away, uh I think I think the main takeaway I had was Berkshire is basically too big in its current state. They have $330 billion of cash. Buffett said they're going to generate $40 billion of cash per year. You got to be able to, you can't just hoard cash for forever. And so
Right.
if 330 billion of that 200 billion or so, they could use today to go out and make an acquisition. And at the meeting, they said that they were looking at a $10 billion acquisition and they lost it. Rumors are maybe it was Skechers because they just got acquired for 9.2 billion by 3G. And my thought is if you're having trouble doing a $10 billion acquisition, which is only it's 1/4 of earnings. So you've got four of those. If you're having trouble doing 1/4's worth of acquisitions, basically per year, then like doing four is going to even be tougher. And then saying you're going to wait till like market turmoil and take advantage of it. They didn't buy anything in 2020 when COVID hit. They haven't had the opportunity. And private equity is just becoming so large that I think the number of companies that they actually have the opportunity to buy, I think is continuing to decrease. The number of public companies has continued to decrease as well. So I just wonder if the universe of companies that they could buy is declining. And so the one way you could easily shrink your company is if you pay out a dividend. And so my guess, at some point they are basically going to have to be forced to pay dividend, or their stock is going to trade at like a discount to book value or their net asset value because of I'm just going to say like a conglomerate discount is what it used to be known as in the past. Just when you're so large and all you can do is really make small acquisitions or hold cash, then you know, there are better uses of that capital. So
Yeah, you end up reverting to like what your organic growth rate is in terms of growth prospects, right? Which
exactly.
some of those businesses are phenomenal businesses, but you can, and Buffett has talked about this in his newsletters, or his not his news, his shareholder letters, that it becomes increasingly difficult to compound at high rates as you scale. So no surprise there, but it seems he's been saying that for a really long time, and it's continued to compound for a really long time.
No kidding.
So the business of Berkshire is really broken into three categories, four, I guess, if you count their cash and treasuries portfolio, which isn't really what's of interest, but maybe today it is more so because of what needs to be done there. But the primary business of Berkshire is their insurance business. So why don't you tell us any big updates on the insurance front?
Yeah, there was a couple. The insurance business, at least in the first quarter, wasn't as good as last year. And Buffett basically said last year was sort of a Goldilocks period where you got higher rates, more volume, and that is reversed this year and less claims last year versus this year. So just results weren't as good as last year, but nothing too crazy. And then the other sort of interesting part was one, you've got the transition from just you and I driving a car to the autonomous cars and what that's going to do to the auto insurance market. And one of the questions they were asked is like, is the actual form of insurance going to change from auto insurance, where you and I are liable in a crash, to a product liability insurance, where the software companies, so it might be like Google, it might be Tesla, Waymo, they're going to need product liability insurance because the autonomous software is going to be responsible for any crash or injuries that occur. And so over time, sounds like you're going to move away from auto insurance to this product liability insurance. And really how does that unfold will be interesting to see. That's not going to happen this year, not going to happen next year, probably like a 10 to 15 year sort of rollout period. But again, just how they are positioned relative to Progressive, Allstate, just other competitors in that space. Is the main thing. And then last thing on insurance, they got asked about private equity has been getting into the insurance space. It mainly gives private equity a permanent source of capital via the float that insurance companies have. And the private equity firms have mainly gone into the life insurance policy business just because that's such a elongated cycle where, if you read a policy for a 50-year-old today, on average, you're not going to pay that policy out for 30 to 40 years. So it gives you a really long runway to invest the premiums that individual is paying. And so Jane, the main insurance underwriter, basically said Berkshire is almost a non-player in the life insurance space anymore because of what private equity has done. But in the property and casualty business, private equity is not that big of a player today, so hasn't affected that side of the business.
Gotcha. Moving on from the insurance business, the next big segment of business for Berkshire is their portfolio of privately held companies, businesses that they 100% own outright that are under the Berkshire umbrella. Any big updates there? I know they haven't acquired anything in the last several years, but anything noteworthy in the private company business?
The utility business is like one of their main businesses that they own. And there's just some talk with basically all the wildfires. What are they doing to mitigate any potential risks that arise when there is a fire? So in California, I believe one of the fires that was started out there was caused by a utility. How does Berkshire invest in their facilities to make sure they are not ever the cause of a fire? And then if a fire does happen around one of their utilities or one of their cities, how do they mitigate any potential damages that occur to one, their plants, and two, how do they make sure their plants don't make the fires worse? And so they talked about, it's called like de-energizing. It's basically powering down of their energy sites or their utilities. And that just doesn't give the fire, I guess, like a source to spread even faster. And then it was brought up, well, if you shut down the power to a city, well, are you shutting down power to a hospital or some other emergency services? And so you might be saving people on the one hand, but then are you like killing people in a hospital? And just, Greg basically said they're working, try and figure out any possible solution to it. And it sounds like the utility business is going to be one where they have a long runway to reinvest significant capital back into. The other interesting part is basically because of all these fires in sort of what's going on in the government, just the utility business is not as attractive of a business today as it was, say 10 years ago.
Got it. One of my favorite parts about the Berkshire meeting is the convention center has all of the Berkshire, not all of the Berkshire brands, but many of the Berkshire brands, everything from Oriental Trading to NetJets on display, and all the businesses in between. As you walked through there, was there anything like, that you recognized that you didn't realize Berkshire owned, or you're probably not the person to ask because you, I'm sure, are pretty familiar with their portfolio, but anything noteworthy you'd want to share about that?
The only thing that was really cool to see is we've owned AirCap, and I follow the aviation industry pretty closely. They basically own the company that has the simulators for pilots to train on, and a lot of that is just going to more virtual reality with the headset. So it's just kind of cool to see like that technology on display.
Yeah, they've made massive investments in the aviation space for owning NetJet, precision cast parts, right? It was a major investment of theirs. I did not realize they own that. So yeah, just a great portfolio of businesses. What about the publicly traded portion of Berkshire's portfolio? First of all, just name some of the top players, the top companies that are in the portfolio, and then any comments about what Berkshire has either bought or sold in recent years.
Yeah, Apple's their biggest and their home run investment over the last 10 years. They continue to sell down that position. Tim Cook's in the room, or it was at the annual meeting, and Buffett gave a compliment to him saying basically Steve Jobs founded Apple, but then like Tim Cook took it to the next level, basically through their capital allocation decisions. I think they're going to continue to sell down Apple. Their other positions, American Express, Coke, have just been long-standing holdings that nothing's really changed there. I think on the public equity side, though, the thing that I would like to see moving forward is Buffett's the main guy at the helm, but there's two guys in the background that also run portfolios for Berkshire, Todd Combs and Ted Weschler. And those two gentlemen, there's been several different reports on just like their performance while at Berkshire, and it would be very nice to see them on stage because they run, I don't know if it's 10 billion or 20 billion each, but they run a
significant amount.
Yeah, they run some capital for Berkshire, and it would be really good to hear what they're doing and just like how they think, because my guess is they're going to probably get more capital since we see where the cash balance is. They're probably going to get more capital to invest over the next 5-10 years as Buffett takes a step back to that. So my hope is that they are on stage next year and people are able to ask them a question. They've never been on stage.
You mentioned it a couple of times already, but just like the alluding to, Berkshire's probably going to need to pay a dividend. Talk to me a little bit about, do you think that'll be what's the scope of the dividend? And then do you think there'll be a special dividend to get some of that excess cash out to shareholders? What do you see happening?
Yeah, they've always talked about maintaining a certain cash balance that is directly for the insurance business. So right now that amount might be 100 billion, 110 billion. And then the remaining cash is able to be invested in public or private companies. My guess is there is going to be a certain threshold that is just going to gradually increase every year as the property and casualty insurance business increases, where once they get over, maybe right now it's 400 billion. So for every dollar over 400 billion, they would dividend out the excess cash. And that number again would increase over time as the business grows. My guess is it would be a small base dividend, and then a special dividend thereafter would be the norm, and that gives them the added flexibility of, hey, if they're seeing a lot of opportunities, then they don't need to pay out that special dividend and can choose to reinvest it. But as of right now, it's just the cash balance and the amount of companies that they would need to buy and the capital to deploy. It's just so large that there are just not many opportunities for them to do it.
Sure. Well, in the interest of time here, we'll wrap up. I have the final question is it's not going to be the same meeting next year with Warren not serving in the capacity as CEO any longer, but do you think you'll go back to the meeting? And you think that as many people that go to that meeting, it's something like 40,000 plus people flocking to Omaha. Do you think it'll continue to be the event that it has become with Warren at the helm?
I think if you're an investor in Berkshire and are curious about the future prospects, next year is probably going to be the most informative meeting since like 08, 09 is going to be my guess, because you are now going to learn a lot more about Greg, Ajit, and I'm hoping Todd and Ted. And those four are the future of Berkshire. And so understanding more about how they think and how they're going to manage the business going forward, I think is going to be a lot more interesting. My guess is you're also going to get a lot more business questions versus some of the other questions that Buffett often gets asked about. So next year I will definitely be going back, one, because I think it'll be the best one in 15, 20 years. Two, the networking is fantastic. And three, on the number of people going, I would expect it to be down quite a bit, because I don't think you will get as many international. There's a lot of people that go there to say, hey, I saw Warren Buffett. And even though he'll probably be on stage, I think just given it'll be in a more limited capacity, you just won't have as many like quote unquote fans of Buffett just show up to see him as you did before he announced it.
Well, I hope that I can join you next year in future years. It's always one of the best trips that we've taken, and would love to have clients meet us out there at some point. Maybe we can host a O'Keefe Stevens advisory meetup at some point. That'd be awesome. Kind of fun.
Yeah,
so
absolutely.
Thanks for spending some time with me today, Dom, to share this. And for anybody who has any questions, you can check out, Dom, you're going to do a write-up on your trip to Berkshire, I believe. It'll probably have a lot of the same stuff, but more importantly, just reach out with an email or a phone call if you have any questions about Berkshire Hathaway, any of the holdings we talked about today that are in the O'Keefe Stevens portfolio, or anything else that comes up. We're happy to share our thoughts.
Sounds good.
All right. Thank you.